Jamf Holding Corporation, the standard in Apple enterprise management, recently announced its IPO, initial public offering, of 16 million shares of its common stock to raise $288 million, which is equal to the IPO price of between $17 and $19 per share. Jamf intends to list shares of its common stock on the Nasdaq Global Select Market under the ticker symbol of JAMF. Placement underwriters are Goldman Sachs, JP Morgan, Bank of America Securities and Barclays. The company provides enterprise IT services for Apple devices and software applications. Jamf enjoys strong investor support, is demonstrating resilient revenue in the face of COVID-19, and has a reasonable IPO valuation. So the IPO is worth considering. Hello there, this is Stockspert. I make videos about personal finance and investments in the stock market. If you are interested in these topics, make sure to like the video and subscribe to the channel for more videos. Today we are reviewing Jamf Holding's upcoming IPO, and let's see what can we expect from the company. And short announcement for those who are located in Europe and interested in access to IPO, you may want to check out the broker by the link provided in the description. Now let's review more information about the Jamf platform. The company provides a cloud platform with a vertically scalable infrastructure and security platform. The platform itself is used in various organizations, including hospitals, schools, and government agencies. The platform helps to connect, manage, and protect products, applications, and corporate Apple resources in the cloud without having to touch devices. Using Jamf software, Apple devices can be deployed to new employees, where they will be automatically configured, personalized, and will be continuously controlled throughout the lifetime of devices. The platform also has Jamf Nation, the largest in the world online community of IT professionals, who focus only on Apple products in the enterprise. Jamf Nation has over 100,000 members. Let's review key benefits of the Jamf platform. Clients using the Jamf platform receive the following benefits: scalable deployment that doesn't require any additional costs, which means IT specialists can remotely perform complex tasks such as encryption information, downloads, and software update. The second benefit is Apple operating system update. IT employees can automate updates. Also, users can keep abreast the latest security and privacy features. And the last but not the least is endpoint security. Custom security solutions endpoints designed for Mac devices, as well as fast connection to corporate resources thanks to unified cloud identity cards using biometrics on an Apple devices. Talking about client base, as of June 30th, the company had 40,000 customers using 17 million Apple devices in over than 100 countries in the world. Among the company's clients is Apple, as well as 8 of the 10 largest Fortune 500 companies, 10 of the 10 largest US banks, and the majority of most valuable brands according to Forbes. Retention rate for the last 9 quarters is above 117%. As Apple is the largest client, let's review their relationship. Jamf was founded in 2002, and today it is the largest platform for enterprise deployment of the Apple ecosystem. For maintaining relationships, the company has built a close ties with Apple developers to keep abreast of all innovations of the company. Jamf and Apple have signed several agreements. Apple became a Jamf customer in 2010. In 2012, Apple began offering Jamf software in its retail stores. And in 2014, Jamf became a member of the Apple Mobility Partnership Program. Let's take a look at the potential market. According to Frost & Sullivan, potential Apple enterprise management market was estimated at $10.3 billion in 2019 and will amount to $23.4 billion by 2024. According to IDC, market penetration of Apple Mac computers will grow from 11% to 14% within just 2 years. Also, StatCounter provided traffic data, according to which Apple operating system accounted for 22% of all global traffic for both business and consumers in December 2019, which is pretty good increase compared to 4% in 2009. Who currently owns Jamf? Vista acquired a majority stake of Jamf Holdings in 2017 for $734 million and before the IPO owns 89.5% of the company's shares. Let's take a look to financial performance of the company. Jamf's recent financial results can be summarized as follows: growing top-line revenue, increased gross profit but reduced gross margin, uneven operating losses, and negative operating margin. A swing to sharply negative cash flow from operations. As of the end of March of 2020, Jamf had $22.7 million in cash and $397.4 million in total liabilities. Free cash flow during the 12 months ended in the March of 2020 was at $3.5 billion. There are also a few risks that you may want to consider. The first is dependence on Apple. Since the company's products is only available for Apple devices, any potential Apple customer dissatisfaction or other negative developments could lead to financial problems of the company. The second is attracting customers. If the company cannot hold and attract new customers, this may affect the future growth of the company. And third is product crashes. If the company's products fail or work incorrectly, this may affect the company's brand and lead to a churn of customers, which can negatively affect the company's revenue. In the conclusion, let me point out some comments on the company. Jamf is seeking public capital to pay down debt and provide expansion for its growth initiatives. The firm's financials show strong revenue and gross profit growth, operating losses, and uneven cash flow from operations. Management published preliminary second quarter results for 2020 showing slower revenue growth. The revenue trajectory was likely hampered by the COVID-19 pandemic and is probably a temporary situation. Although how long temporary will be is unknown. The market opportunity for providing enterprises IT services for their Apple users is large and likely to continue to grow at a significant rate, so the company has positive market dynamics in its favor. Some analytics forecast an upside at 30% of the upper limit of placement share price. Given strong investor support, resilient revenue growth in the face of COVID-19 pandemic, and the reasonable IPO valuation, the IPO is worth considering. But as always, you never know what will happen to the brand new stock in the market. I'd like to hear your opinion on this IPO. Maybe some of you are going to buy or want to prevent from buying others. Just let me know below in the comments. If you want to make a contribution to videos I make, please click the like button, and if already did that, subscribe to the channel for more videos in the future. Thanks for watching and see you next time.